Okay, hello everybody. Welcome to Korean Atlanta Mentorship. And in this video, we're just going to do a quick review of extra payments versus velocity banking. Now, if you know me, I honestly don't care which one you do, right? It's like when Star Wars used to be big and a lot of fans were getting into debate with the decisions against George Lucas when he made sure that Han didn't shoot Greedo first, if you ever watched Star Wars A New Hope. And then they actually asked Harrison Ford, the actor of Han Solo, who shot first, Han or Greedo? And he was like, I just don't care. That's how I kind of am too. Like I really don't care whatever you do you. And but I'm just gonna give you some perspective of extra payments versus velocity banking. So if you don't know what the concept of extra payments is, it's basically putting all your savings, extra savings into a tire loan. So for example, if you have $5,000 in checking or $5,000 paycheck, $3,000 in expenses, then the $2,000 left over would go directly into any loans that you have in addition to the loan payments that you would need to make, right? And so if you ever listen to me talk, I'm never going to say don't do extra payments. I'll just probably say something like, "Hey, this is how velocity banking works, and look how easy it is, and here's the interest that you would pay, and here's the interest that you would save, et cetera, et cetera." But you'll never hear me say, "Oh my gosh, don't do extra payments. Oh my gosh, velocity banking is so superior that this is the worst thing in the world if you do extra payments." I honestly, I just don't care. But I do velocity banking because it's really simple it's an easy cash flow management system for me where I can almost turn my brain off and I can take a look at like the amount that I paid, this is my current balances this month, next month. Oh, it went down about, I don't know, 3,000 or $4,000 a month. And I still have liquidity and I didn't pay that much interest. And this was really easy for me, right? And so let me just kind of tell you what I think about and what it feels like to me in an analogous way. I'm not going to do any math here, but what I will tell you is yes, you can save a lot of money and a lot of interest doing extra payments. Definitely not going to deny that. But one of the things I kind of want to mention is that when you do put extra payments, you put all the extra save. If you put all the extra savings into loans, you lose the liquidity, right? That's one issue. So, if you ever try to overpay, let's say a student loan by $2,000 and you had a $100 emergency, you can't call the student loan company and ask for your money back, right? Now, some people may say, well, just use a credit card for emergencies. Okay. Yes, you can do that, right? So let's say like you put your $2,000 of savings into that student loan, and then you had 100 or maybe a $1,000 emergency. Then what happens? Essentially, you have segregation of income, right? And we all know that the average person doesn't just have one credit card or one loan, right? So now it becomes a situation where you really have to think what you're going to do and how to attack the debt and the extra now credit card that has segregated your income, right? And that's kind of like the opposite of what velocity banking is trying to do. Now, I'm saying not saying that you can't win, but in my opinion, you need exact discipline to figure out what amount to allocate between the loan and the credit card and how you're going to pay it off. And for me, I don't like thinking too much, right? I'm a pretty lazy person. All I know is when I see velocity banking, paycheck in, expenses out, eliminate debts, free up cash flow, paycheck in, expenses out, and we're good, right? So that's my train of thought. Now, the other thing too is you have to consider that this is the default option available to everybody. So why doesn't everybody do it and just pay off their debts quickly? I mean, we live in a world where people buy a house $300,000 and then 30 years later they still owe $300,000. I know people who bought a home in the 90s for like $600,000 and they owe like magically 1.5 million on it 30 years later. And if you want to look up financial data on any property, it's public data. You may have to subscribe to a software service to access that data, but it is public data, right? If you have a realtor's license, you have access to MLS. the MLS has that data. So it might not be like super easy to find with a Google search, but you may have to pay for it, but it is public data, right? And so my challenge to you would be to look up properties that maybe your childhood friends have owned or their parents or people that own, and then you'll see like how much they owe. And then year one of the mortgage, they somehow magically owe the same amount 10 years later, probably because of refinances, or they sold their home every 5 to 7 years. So, we people are not comparing like reality, right? Whereas for me, I paid off a quarter of a mortgage in a year, okay, with Velocity Banking. So if everybody has the option of just doing extra payments, why doesn't everybody do it? Also, one thing I want to note is that this doesn't work in a zero cash flow situation. Like, and I made a video about this where you can't, if you have zero, like if your paycheck is exactly the same as your expenses, what is there to put in extra payments in the loan? If you ever needed $1 extra in that situation, you definitely cannot do anything with extra payments because there's nothing to pay. And if you're again, another issue with $1 extra is that you're probably gonna ruin your credit or be put into collections or something because you didn't pay off one of your loans by using your checking account as your operating account. Again, one of my videos that I've created here, that I'll probably put the link down below. But my point is this is my thought process when it comes to extra payments. Now, I'm not saying that you can't win with extra payments. You certainly can. You're going to save a lot of money, definitely, right? Now, I've drawn this awesome picture in paint here about what I think about extra payments in the form of my experience. Well, this is a representation of my experiences when I used to kind of do deliveries on one of those apps like Postmates. I think I did that for like 1 week and they fired me because my score wasn't too high. But this is a long time ago. And so I remember when I was making those deliveries, I'd use like one of those GPS apps like Waze or Google. And what was really frustrating is that they would try to take me to the most efficient route, but it was really inefficient. And I'll tell you why. So let's say I start here and the app says, okay, make a left. And I make a left, right? So pretend this is like the representation of extra payments. I go here, I go straight, make a left, right? And I do make a left, and it's pretty good. And then I make a right. GPS tells me to make a right, and I'm good. And then I have to make this left turn, but there's no stoplight, and there's oncoming traffic from this side, right? And so now I'm stressed out and I'm freaked out because I don't know when I'm supposed to make a left, right? And that's kind of essentially what this part comes in, where either you lose your liquidity, or if you have credit cards and you use that for emergencies, now you have that segregation of income. And I feel that stress, like I don't know what to do, right? So this is why I hated a lot of GPS apps, and I think they're getting better, right? But I remember when I made those deliveries, I go in, I make that left, it's taking me to the quote most efficient route. I go here, and then all that incoming traffic is there. There's nothing that the cars are speeding by. I have to turn left, and I'm really stressed, even though this is the fastest route. It's at this point that I don't know what to really do anymore. And that's how I feel about extra payments. Now, you may end up here, but for me, that's too much thinking. I'd rather take the easy route where I just go here, put my paycheck into one place, take out my expenses from one place, and then just end up here. And it's easy. And I don't have to think about it. And you all saw the pictures where I paid off quarter of a mortgage in a year, right? And that's with after the line of credit was replenished. It went to zero. So I don't know about you, but I'm pretty sure that we live in a world where most people do not do that, right? And so if somebody's going to tell me how velocity banking doesn't work, and I just show them the picture and they're just going to ignore that, I'm like, cool story, bro. You do you, I honestly don't care. Yes, extra payments is, you can just do that. That's the default. So why doesn't everybody do it? Someone should create a channel called Extra Payments is Awesome, right? But they won't do it. Or maybe they will. I don't know. Maybe they'll be inspired by after this video to create that channel and show me how extra payments is superior. Now, here's the thing. You'll probably never hear me say, "Oh, always do velocity banking." I say just do what's right for you. You know what I'm saying? Like when I do my videos, I just say, "Hey, this is how pretty much velocity banking works." I do this, I put paycheck here, I take expenses out, it goes down, we're good, and rinse and repeat over and over again, right? And who knows, maybe I'll one day do extra payments, but then the thing is, I don't want to think too much, because if I have to think too much and I go here, 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 it's going to remind me of those bad times when I have those GPS apps that tell me the most efficient route, and then I'm stressed out here because it doesn't know it doesn't know what's really going on. It's not the big picture isn't really there. You know what I'm saying? So hope that makes sense. So this is just kind of my first attempt to kind of explain the differences between extra payments versus velocity banking in my head, right? And if you want to see like an actual explanation of velocity banking, go ahead and click the link to Velocity Banking 101 below. So this is Crane Atlanta Mentorship. If you're interested in joining our group, go ahead and click the Google form link below, enter your information. We get on Zoom call for intro call, or you can just email us in the About section of the YouTube channel if you're interested in joining. Okay, so have a great day, everybody, and we will speak next time.